Assalamu'alaikum warahmatullahi wabarakatuh. My name is Juljas Topi. I'm a student from Raden Fatah, Palembang with the major Islamic banking. And in this video, I want to explain about credit management. Credit management is how to manage credit provision starting from the credit given until the credit is paid off. According to Law Number 10 of 1998, Article 21, Paragraph 11, concerning banking stage, credit is the deposit of money or a bill equivalent to debt based on an agreement or loan agreement between the bank and another party that requires the borrower to pay off the debt after a certain period of time with interest. The elements of credit are 1. Time. Time is a gap between the time of the loan approval and repayment. Every credit given has a certain period. This period includes the agreed credit repayment period. The time period can be in the form of short-term, medium-term, and long-term. 2. Trust. Trust is a belief that credit provider give credit in the form of money, goods, or services will actually be received again in a certain period in the future. Submission or object, where the creditor submit the economic value or object in the form of money or bills to the debtor, which must be returned after maturity. Risk. Risk is a grace for repayment that will cause an uncollectible risk or loan default that may arise over the term of the credit. The longer a credit, the greater the risk, and vice versa. Creditor and debtors. Between creditor and debtors, there is an agreement or loan agreement to borrow money as evidenced by a deed of agreement, and each party in their respective right and obligation. Repayment. Repayment is an advantage of granting a credit or service that we know as interest. Repayment in the form of interest and credit administration costs are bank profit, whereas for bank based on Syariah principle, their services are determined by profit sharing. In addition to the above-mentioned element, in a credit can also involve several other parties, such as notary, appraisal company, insurance company, land deed-making officer or PPAT, fiduciary institution or Department of Justice, and BPN, NH. Main objective of granting a credit are as follow: looking for credit, helping customers, businesses, and help the government. Practice in Indonesia, taking into account the conditions set by Bank Indonesia, determination of the amount of credit is influenced by the following condition. 1. Reserve requirement, RR. Reserve requirement is a provision for a free commercial bank to set aside a portion of third-party funds that have been successfully collected in the form of a mandatory minimum demand deposit in the form of a checking bank in Bank Indonesia. To deposit ratio or LDR. Loan to deposit ratio or LDR is the ratio between the size of the entire volume of the credit extended by bank and amount of funds received from various sources. Maximum lending limit. The maximum lending limit is a provision about not allowing a bank to give credit both to a single customer and to group customers, the amount of which exceeds 20% of the bank capital indication. Portfolio investment. The last priority in the allocation of bank funds is to allocate a certain amount of fund to a portfolio investment. The allocation of bank fund into this category is residual fund after investment of fund in the form of loan. Type of credit in terms of usability. 1. Investment credit. Investment credit is credit grant for the procurement of capital goods and services intended to produce an item or service for the business concerned. Yang kedua, work capital loan. Work capital loan is a loan grant to finance business needs, including the use of covering production costs in order to increase production or sales. Type of credit is seen in the term of credit objective. 1. Productive credit. Credit used to increase business or production or investment. The credit is given to produce goods or service. 2. Consumptive credit. Consumptive credit is a credit is used for personal consumption. And 3. Trade credit. Credit used for trading, usually to buy merchandise for which payment is expected from the sale of medical merchandise. Credit differs in terms of term. 1. Short term. Short term is credit that is not exceed a period of 1 year and is usually used for working capital purpose. Yang kedua, medium term credit. That is a credit given with a period of 1 to 3 years, usually for investment. 3. Long-term credit. Long-term credit. That is credit given for a period of more than 3 years. From the business sector, credit for agriculture, animal husbandry, industry, mining, education, profession, and housing.